Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me today, we have Shawn Cruz. He's the Manager of Trader Services at TD Ameritrade, to discuss the Nasdaq-100 over 10,000. Shawn, it seems to be that these tech names are going to hold up whether we're all staying at home or reopening the economy.
And I think that was something a lot of market participants were wondering, was if we do start to reopen, are you going to see a rotation completely out of some of these tech names that have just been so strong for the past couple of months, or are you going to see those names continue to benefit in an economy that is also reopening? And it looks like we're getting that answer with the NASDAQ hitting 10,000, a new all-time high, an incredible number, while you're still seeing some recovery in some of these other sectors. But I think it just shows that it's a matter for staying at home, or if we are going to start getting back out there and these reopenings are going to continue to expand, the NASDAQ companies seem to be well positioned for either environment.
Let's take a look at your second chart here, because my question is, are you concerned about concentration at all?
I think one thing to think about, and we think about concentration or the makeup of these indices, one thing to think about is what they're meant to do in some ways is also reflect what is actually happening in the economy, where actual money is being spent, or where there is successful growing companies. And to me, I don't think it's at all unusual to think that you are seeing some of these companies like Amazon, Apple, Google, Facebook, or Microsoft becomes such a large part and have such a high weighting, because when you think about it, those companies are the companies that are probably going to be getting a lot of the business, and that large swaths of the population, a lot of those companies out there use in their day-to-day lives and their day-to-day business activities. So I think this is actually reflective of where a lot of time and money is being spent right now out there in the economy.
All right, if we take a look at our third chart of the day here, Amazon, that's one of those companies that appears to be well positioned moving forward. It just seems to perform in any kind of market.
It does. And we were looking at this recently, Jill, where we saw that the NASDAQ seemed to be butting up against sort of these resistance levels on the upside. And at the same time, we saw some of these bigger constituents remain sort of at those resistance levels on their own as well. And one thing we were saying was, if you really want to get a meaningful breakout for some of these index products, then you probably need some of the bigger constituents to also break out. And if you look at this chart of Amazon, that appears to be almost exactly what has happened. They were finally able to break through that resistance level that we had previously identified. And you also see the index making new highs as well. And you can ask yourself, what's changed? Well, we've actually gotten some pretty interesting news out of Amazon the past couple of weeks. They've announced the Boeing 767 purchases, which sort of shows a commitment to tightening up their own logistic operations, which can actually help their margins moving forward if they're effective at doing it. And there's no reason to think Amazon won't be effective at that. And we're also just seeing a lot of price target upgrades on the back of that. So that's why we say Amazon was well positioned for the stay-at-home economy, and it looks like they're taking the steps they need moving forward to that as well. And the one thing that I think is going to be key for them is keeping customers who they have now gotten comfortable making their purchases or doing some shopping online, that maybe they weren't so comfortable with that before. They would have preferred to have gone down to the local store to make that purchase. Their hand was sort of forced, and we've almost fast forwarded now to a little bit further down the line in terms of comfort with making these purchases online. So I think Amazon will be able to keep those customers sticky to their platform, keep them on their platform, making those purchases on their platform, even when we do start to reopen. I think that'll be key.
All right, in our last chart here, taking a look at a retailer. And we know what the retail story has been as we've been going through COVID-19 lockdowns, but it seems to be that they're making a comeback as that demand slowly trickles back as we reopen the economy. In fact, New Jersey's ban has been lifted this afternoon as we speak.
Yeah, and I think Five Below, if you look at where they're geographically dispersed. So they were already in some of these areas that were able to lift some of those restrictions. And they report about 75% of their stores were open going into the end of May, which is going to be helpful for the stock, and at least getting some revenue going, at least providing some good outlook on the revenue front. But we've also just seen analysts providing quite a few price target hikes, and the hikes are being provided well above where the stock is trading at right now. And I think that's interesting because if you look at the options market, it's pricing in after the report earnings. They give you a little bit of a range that they expect the stock to trade in. And right now, the options market is saying that range is about $7.50 above and below where the stock is trading right now. It's about a 7% move. Which maybe you could say doesn't sound so unusual, but when you look at some of the other retailers out there, um, they've actually been pricing in 10% moves or higher. So for whatever reason, option markets don't seem too concerned about five below post earnings. I think there could be a little bit of an upside surprise here if they're able to guide well enough. And if you look at the chart, I put the volume up there so you can see where a lot of the volume has gone off in this stock previously, and that's right around that $122 level. The other thing to note, though, is if they, for whatever reason, miss, or they do maybe have a little bit more caution when they guide, there's not really many significant volume levels on the downside that could maybe serve as some sort of a stabilizing price level. So that could be one thing to watch here. So the option market is telling you not too much concern here. But if there is some just complete surprise on the upside or downside, you could see some pretty outsized moves here post earnings.
All right, Shawn, thanks so much for joining us as always.
Thanks. Have a great day.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.